Hello and welcome to the Costing and Pricing Learning Program, webinar number 4, Costing Practice. My name is David Gilchrist, and in this webinar we will be looking at the actual practice of costing, where data comes from, and some of the concepts surrounding ideas like relevant range. Before we get into this webinar though, I'd just like to remind you of the copyright requirements surrounding this body of work, and particularly for those people who might be intending to use these resources in future, you need to consider these copyright restrictions. Secondly, I'd like to remind you of the navigation arrangement. So the previous webinar, webinar 3, was actually an introduction to costing and pricing, where we looked at some of the practice issues and some of the definitions. In this webinar, we're looking at costing practice specifically, and in webinar 5, we're going to look at pricing practice. One of the things that's really important in relation to this particular webinar and the next webinar, webinar number 5, is that you look at these webinars and listen to them in the context of the materials that are available on the Costing and Pricing Learning Program website. These webinars are really only one part of a presentation of the study guide, the macro case study, and also other materials that are available on that site. You need to look at all of those materials to get a full picture. Hello and welcome to webinar number 4 of the Costing and Pricing Learning Program. Apologies, we just had some technical difficulties with the sound. However, the sound appears to be working now, and I hope everyone that's listening in and everyone that listens in future is able to get full value out of this webinar. My name's David Gilchrist, and in this webinar I'll be looking at costing practice specifically. Before I do that though, I'd like to just remind you of the copyright requirements associated with this Costing and Pricing Learning Program, and particularly if you're intending to use these materials other than for personal purposes, you need to remember the restrictions surrounding their use to make sure that you don't inadvertently override the copyright requirements. Secondly, I'd like to remind you of the navigation beacons that are set up throughout this webinar and through the full Costing and Pricing Learning Program. All of the materials that are available there are interconnected through navigation processes, and particularly to identify that this is webinar 4. Last webinar, webinar 3, was an introduction to costing and pricing, and webinar 5, the next webinar, will actually look at pricing practice. So in this particular webinar, we're keen to look at costing practice solely. It is important for you to remember though that this webinar needs to be considered in the context of the macro case study, the study guide, and the other materials that are available on the Costing and Pricing Learning Program. There is a limit to what we can undertake within a particular webinar, and therefore it's important to make sure that you use this webinar in conjunction with those other materials. Having said that, the learning objectives for this particular webinar really focused on making sure that people have an appreciation of where information comes from for costing, to understand how cost items make up the cost of services, and also to explore some of the constraints to costing, particularly in relation to the relevant range, and also to look at some specific cost items, what we would call the material cost items, such as personnel, transport and real estate costs associated with the provision of services. We'll look at all of these things as we work through this webinar. In the first instance, though, I'd like to talk about some strategies for costing and pricing particularly, or generally, but costing particularly, because that is the focus of today's webinar. The first strategy really relates to communication, and like anything in any organisation, good communication at the start will greatly increase the use that will be made of the results. It'll greatly enhance the ability of people to engage with your costing process, and to help make sure that you have the best possible assumptions, because you've been able to engage people and get information at the right time and of the right quality. With the CEO, board and senior managerial staff, you also might find that you need to brief that staff on what kinds of things you're doing for costing, what kinds of assumptions you're making, and what kinds of policies and rules you're intending to put in place to make sure they're aware of how the costing and pricing process will work in your organisation. And of course, depending on the size of your organisation, they might not actually see much of the actual work that goes into the process, and I think that's probably fairly important to report as well, because as we discovered in webinar number 3, the act of costing and pricing is also a cost to the organisation that needs to be kept to a minimum from a practical perspective. When we start costing, we need to start the process by looking at the current situation of the organisation. Again, referring back to webinar 3, it would be remembered that costing is really a forward-looking process. We actually look to estimate the activity levels that we think will happen in the coming year or the coming period. We look to estimate the costs of those activity levels and also the timings associated with those activities. We always start though with the history, so including what information we already have to hand, what existing allocation of staff to service lines and numbers of services they deliver is all part of the start of the analysis process. So we work out exactly what's happening in the current situation and then move forward. We also gather information on the fixed asset register and work out which fixed assets are allocated to each service and how those fixed assets, in terms of things like costs of depreciation, might be allocated to particular service lines or units of measurement, as we've come to call each activity. There's other things that also need to be gathered, other pieces of information, which include things like what your actual activity levels have been traditionally or historically, including the numbers of no-shows that might affect your capacity to generate income for your organisation. Remember, under person-centred care and individualised funding models, so under the NDIS for instance, it's not so much that you will get funded to provide services as that you will get paid on invoice for services already provided. Therefore, the number of no-shows or the number of times you've been unable to deliver services to particular clients needs to be taken into account in order to be able to forecast what your activity levels are likely to be, as opposed to what your capacity for activity might be. The other thing that you need to think about too is things like the technical issues relating to the organisation and the services themselves, how those services will be delivered, and also how information regarding actual outcomes will be communicated back to head office in order to form decisions. Finally, of course, you need to think about prioritising costing processes above some other things, but not all other things. So you need to work through the level of importance that costing sits in your organisation as compared to other activities. Let's have a look now at costing practice itself, and particularly to start with relevant range and assessing activity volumes. Relevant range is a really important concept for people to come to grips with when they're thinking about costing their particular activities. The relevant range relates to, or is the level of activity and the time period in which all of your assumptions about costs are most likely to be true. So one of the things about costs is, even though we divide them up into fixed and variable costs, all costs change over time. So the period of time that you're forecasting is a very important part of the relevant range exercise. Secondly, some of your fixed costs and some of your indirect costs will change depending on the level of activity that you undertake. If you drastically increase your activity, for instance, then you will have a likely need for greater amounts of management, perhaps a larger head office staff count, perhaps more payroll staff, etc. Therefore, when you change your activity levels, or when you change the time frame over which you are costing, you need to be very aware of the relevant range and whether or not the assumptions you made originally are going to hold in the new environment. Therefore, the relevant range is, in simple terms, your current scale of operations, your existing fixed costs. It may be that taking on new opportunities means your existing operations are too small and you need to let more space, or take on more office staff. As I said before, you might even, depending on how big your organisation becomes and how quickly, need to take on new computer systems or replace other financing or other systems that you might have in your organisation. All of these things mean that as you move from one relevant range to the next, your fixed asset cost base rises, and therefore you have a change in the cost of your activity. Remembering that changes in activity volumes also mean that there will likely be changes in economies and diseconomies of scale. So tools are important to be able to forecast these particular elements. The final piece on the relevant range is that you ultimately will be trying to calculate an average price for each UOM, unit of measurement or activity that you undertake. You need to think about what the effect of adding the extra output in terms of cost recovery, or what the minimum price should be less than the overheads, so that you're recovering your overheads plus your margins. Let's build up some costing, some key cost parameters. Cost classification is, as you know from the last webinar, a very important element of the ABC methodology. Understanding how costs behave is actually critical to achieving a costing outcome that's going to bear some semblance to the likely reality in the future for your organisation. If you don't get the costing right, of course, there's a significant problem associated with sustainability if you are not recovering costs or you don't understand what the true cost of service delivery is. A fixed cost, as you recall, is a cost that is incurred regardless of whether activities are undertaken. So if the doors are not opened or services are not provided, these costs are still incurred. Examples, of course, include rent, insurance and corporate head office costs, such as the CEO, and could also include IT or phone, legal and other compliance costs. These costs generally remain the same or are fixed within the budget period, but also within the relevant range. And as you can see in that first graph in the top left-hand corner, the relevant range changes with activity levels, because you have to build your fixed costs, you have to build your administrative and other capacities in order to accommodate step changes in your activity levels. Variable costs are incremental costs incurred whenever additional units of measurement are supplied. They're contrasted with fixed costs and are considered to be uniform for each additional unit of measurement. Remember, this is purely an accounting process, so variable costs don't actually work that way. And again, referring back to webinar 3, you'll recall that in fact staffing costs, direct staffing costs that we often count as variable costs, can in fact be fixed costs because those staff are actually employed full-time and permanently with your organisation. These are accounting constructs designed to help us to arrive at a cost of a service, and therefore we need to be aware and make sure that we understand how those costs work and also the assumptions that we're making in determining what the cost of a particular unit of measurement might be. Generally though, we would say these costs would not be incurred if the doors were not open and services were not provided. And of course examples include things like support staff, fuel for vehicles and transport services, or meals for clients. Under the NDIS, the income will typically go up as you deliver services, because you will get paid based on each service iteration by invoice. So an additional service should result in more income. And the costing practice, and ultimately the pricing practice, of course, is focused on trying to determine what the right mix of services is for your organisation, and also from a financial sustainability perspective, what level of activity is most appropriate to ensure financial sustainability. Part of that process then requires us to estimate activity volumes. As with just about everything in business, this must be done flexibly and iteratively to allow for new discoveries on the way while it's being done. In other words, entering the costing practice process will probably see organisations change quite a bit as they come to understand their financial structures in a new light. Where mistakes are made, and they will be, they need to be corrected as soon as possible, and proper costing data allows this to occur. One of the big risks associated with costing and pricing, particularly for novice organisations, is to be blaming people for poor estimates or poor forecasts. It's really important that you have an environment where you accept that mistakes will be made, and that over time and iteratively you will gradually land on a more proper cost of service delivery for your organisation. However, costing can also be taken too far. The further the investigation, the deeper the costing process goes, the more it will cost for each change in the costing data. A form of diseconomy of scale, if you like, because we're actually costing actually costs the organisation to perform. Therefore, we should also seek to avoid those kinds of costs. A good general guide is that if you are somewhere around 90% sure that you have the right figures, then that will generally be the correct point to stop and to get on with other jobs. In other words, making sure that you feel confident with the costs that are being created, making sure that those costs look similar to the history that you've had, or if they are dissimilar to the history that you've had, that those changes are explainable, that you're able to understand why that change has been recorded. In terms of volume estimation, as I said before, historical volumes are always the best guide, particularly in relation to no-shows, which under the NDIS funding regime will be particularly critical because you will not be funded unless you actually deliver a service. There are some mitigations to that which we will talk about in that following webinar, but for this purpose I think it's important to understand that services are only paid for on delivery as opposed to being funded up front on the potential of services to be provided. You need to forecast all of your activity volumes for all of the types of activities you have, and according to webinar 3 you need to come back to perhaps mapping all of those activities to the NDIS price guide so that you can understand and make sure that you're costing at the right level for your organisation to be able to give quotes and to provide invoices to NDIS when you're claiming income. Let's now have a look at some specific costing practice, and I want to start with people. People, of course, are generally the biggest part or the biggest cost of organisations who provide disability services. They're the biggest single source of expenses because they are the disability service provision is significantly people orientated, and of course it's labour intensive. The kinds of costs that are important include salaries and wages obviously, but also the on-costs associated with employing people, including super, fringe benefits provided. That's the cash cost, not the taxable value, given that most disability service providers are deductible gift recipients. Things like shift allowance, annual leave and so on. In building your costing, it's generally best to start with people, but it's also best to understand where those people sit in the organisation and how you make decisions about whether or not they represent direct costs or fixed costs associated with service delivery. And remembering you can have fixed costs that are also direct costs where you have supervisors or others that are providing supervising the direct service provision staff. In not-for-profit services, this is fairly usual that we have a person or a couple of people that are actually overseeing these services. Onboarding costs are costs that are associated with bringing staff into the organisation. So in terms of organisations in the disability sector and broadly in the broad human services sector, we often have relatively high turnover costs. Those onboarding costs relate to those turnover costs, and of course they have to be recovered along with all of the other costs associated with staff in your organisation. The other thing that we need to consider is what drives the costs. Now this again is purely an accounting construct that's designed to help us to cost services specifically. But the kinds of things that cost or drive costs for people include, of course, the payroll, the awards, the historical data that we've had, but the activity levels, and particularly increased activity levels, need to be taken into consideration. There might be other contextual issues too that we understand, for instance where we expect awards to rise in time to come, or where we expect that staffing ratios may need to change as a result of, say, care standards that might be brought into place. The principal cost driver for human resources, though, would be the units of measurement. And remembering from webinars 2 and 3, the units of measurement are typically a per hour of service or a per unit of service. A per unit of service might be a bed day or a bed week, or some other function of the way a service is charged to a particular client. In terms of issues to consider in terms of costing people, remember that while one service delivery unit or one unit of measurement might be an hour of service, all costs associated with achieving a successful service delivery must be included. So a good example here is where you might, for instance, charge a OT hour where you have a 45-minute appointment where services are provided, but include 15 minutes additional to that 45 minutes for writing up notes, preparing to be able to provide the services, etc. So a unit of measurement is not necessarily just the hour of service itself or just the particular bed day or bed week. It is actually taking into account all of the costs to make it possible to deliver that particular unit of measurement. So for instance, in home care is another good example where travel time and travel costs would also be included as part of the calculation of that unit of measurement. You need to recover all of those costs, and therefore we seek to recover over the time it takes for the service delivery unit or the unit of measurement to be provided in its entirety. Speaking of transport, let's have a look at transport now. Transport is also a major cost for organisations, and motor vehicles generally are also a significant cost. Remembering again that you need to look at these slides in the context of the macro case study and the study guide, particularly in the costing and pricing learning program. Costing issues in relation to transport include that often not all information is provided by vehicle. Not all costs are separated by vehicle in the ledger, because traditionally we haven't had to do that. However, you do need to think about the limit to value in separating precise costs and looking at each vehicle specifically, as opposed to looking at vehicles on a item by item basis or on a fleet basis. It might be that you cost at a particular type of vehicle level rather than each individual vehicle. You also need to include in the costs of running your vehicle fleet things like vehicle turnover costs, and you may also consider that geographical issues may be important. So for instance, in the metropolitan areas it might be just as easy to have an average cost of transport or an average mileage to take into account when you're costing your transport services, whereas in the country you might be inclined to cost for specific jobs because there's much more travel involved and much more time spent travelling. You also need to think about the cost of the purchase of your vehicle fleet in terms of the funding source for capital purchases, and to be able to cost into the costing process an amount for that capital purchase. That might be in the form of depreciation, it might be in the form of lease costs, or it might be in the form of interest paid on mortgages associated with the purchase of those vehicles. Of course, information sources for motor vehicles, we always start with prior financial history and look at what has been the typical costs of those vehicles in history, but we might also look at things like logbooks or odometer readings, and we might consider client invoices as a part of our costing process, where we've actually used our client invoices to record the number of trips that people might make. Remember, with regard to the units of measurement or the service delivery units, in costing terms we might actually decide to incorporate that cost as part of a general cost of service, or we might charge things, transport services separately, such as by trip, by hour, per hour, or on a per kilometre basis. The other things to take into consideration in terms of those costs include the salaries and wages and on-costs associated with drivers for your transport service. It also, obviously, we need to take into account things like fuel, insurance, registration, repairs and maintenance, and as I said before, those lease and other costs associated with procuring the motor vehicle. Other issues to consider include the total cost that is allocated per service delivery unit or unit of measurement for transport services, as well as I said before, that different trips may be covering different distances and you may take more or less time associated with each trip. Obviously, costing averages is the easiest and most cost-efficient way to undertake this process, but it might be, as I said before, that you need to cost specific trips, particularly if you're operating in rural, regional or remote areas. The other thing to consider in the context of costing transport services is the instance where you have volunteer drivers driving for you. You still need to cost that service because you're consuming that volunteer driver, if you like, in terms of their time and effort that could be allocated to other service provision within your organisation or allocated in other ways. Therefore, it's important to consider what kind of price you might allocate or cost you might allocate to those volunteer drivers. The other reason that you might cost volunteer drivers is against the day that a volunteer driver might not be available to provide services and that you might have to pay someone to actually undertake that transport service. If that's the case, then you need to have that already incorporated in your costs in order to ensure that you recover that amount. Let's have a look now at real property or real estate in terms of the costs associated with delivering services. Remembering a lot of real estate in our sector, in the disability services sector, often relates to head offices and what we call fixed overhead costs. So those costs associated with staff, central administration and so on. However, of course, there are also costs associated with real estate when we think about assisted accommodation, group accommodation, or even offices that might be set up as regional or specific offices designed to provide services in or to house administrative staff supporting services specifically. Again, organisations need to make decisions in relation to how they treat those costs from a service delivery perspective and a cost of service delivery specifically. In terms of real property though, you need to of course gather all of the costs associated with that operation of that real property, but also the costs associated with the acquisition and ownership of that property, or at least the rental or deployment of that property. So being in control of the property adds costs to your service delivery. Things like interest for mortgages, rental properties and rents, including those used for program services and the head office, are really critical. If clients contribute a portion of their pension to paying board or other costs associated particularly with accommodation, then those gross costs and the record pension contributions are all negative costs that need to be taken into account in costing your service delivery as well. Those are the three principal costing areas, because they're the three costing areas that are the most costly and the most significant for most disability service organisations. Of course, there are a whole stream of other costs that are associated with costing and service delivery, including, as I mentioned before, those administrative overheads such as accounting and audit costs, and direct costs such as the purchase of small materials and other things that might be used in service delivery. It's important again for you to go back to the macro case study and also the study guide to explore this idea of costing practice a little further and more deeply, and to also look at some of the examples that are associated with that, particularly the micro case studies, which look at how costs for people are to be calculated and how other costs associated with the division between fixed and variable costs and also overheads and direct costs are taken into account, how those decisions might be made by you. So it's worth looking at those micro case studies in that regard. The next webinar, webinar 5, looks at pricing practice, and I hope you're able to come and join us for that webinar. In the meantime, if you have any queries or comments regarding this webinar, please don't hesitate to contact us at the Costing and Pricing Learning Program. We'd be very happy to take those queries on. In the meantime, look forward to talking to you at the next webinar.